Most people in the finance world will tell you that $20,000 is nothing. They'll tell you it's just a down payment on a car or a few months of rent in a big city. They tell you to ignore the small numbers and wake them up when you hit six figures. But they are lying to you. They are looking at a spreadsheet while ignoring the physics of the human mind. In the world of science, there is a concept called phase transition. It's the exact moment when ice turns into water or water turns into steam. The temperature only moves by 1 degree, but the physical properties of the matter change entirely. In your financial life, $20,000 is your phase transition. It is the most violent, difficult, and psychologically taxing milestone you will ever achieve. But it is also the moment the world stops being a place of survival and starts being a place of strategy. This first 20,000 is mathematically more significant than the jump from 100,000 to a million. Before we talk about the 20,000, we have to talk about the weight of zero. When you have little or nothing saved, your brain operates in scarcity mode. In the business world, we study decision theory. When the brain is in survival mode, your time preference collapses. You cannot think about a 10-year retirement plan when you are worried about a 10-day rent cycle. There is a cognitive tax paid by every person living paycheck to paycheck. Research has shown that financial stress can temporarily lower your functional IQ by up to 13 points. Think about that. You aren't making bad decisions because you lack intelligence. You are making them because you lack cognitive bandwidth. Your brain is literally too busy calculating survival to calculate compounding. At zero, you are a hostage. You take the first job offer because you can't afford to wait. You stay in a toxic situation because leaving feels like a death sentence. Saving your first $1,000 is like getting your head above water for a single breath. But 20,000? 20,000 is the moment you climb onto the boat. At this level, the IQ tax is repealed. You regain those 13 points of intelligence because you are no longer scanning the environment for threats. You are now scanning the environment for opportunity. But here's the part the banks don't want you to know. Most people view 20,000 as spending power. I want you to view it as volatility insurance. The average person is one flat tire, one broken heating and cooling system, or one medical deductible away from total financial ruin. When a $1,000 emergency hits a person with zero savings, they don't just pay $1,000. They put it on a credit card at 24% interest. That $1,000 car repair ends up costing them $3,000 over 5 years. This is the poverty tax. When you have $20,000, you have effectively insured yourself. If you lose your job, you don't lose your home. If your car breaks down, it's an inconvenience, not a catastrophe. By hitting 20,000, you have solved the liquidity crisis of your life. As a CPA, I can tell you that businesses don't usually fail because they aren't profitable. They fail because they run out of cash. 20,000 is your cash buffer. It silences the survival center of your brain. Once you hit 20,000, stop looking at it as a savings account. Start looking at it as your internal insurance company. Let's run the math. Assume a 10% annual return. At 20,000, your money is earning you $2,000 a year. Most people look at that and scoff. They say, $2,000? I can't retire on that. But look at your line item expenses differently. $2,000 covers your car insurance for the entire year, or it covers your phone bill, your high-speed internet, and your gym membership. At $20,000, you have officially retired a specific category of your bills. You are no longer working to pay for those things. Your capital is. This is the first employee you have ever hired. Every time you add another $10,000, you retire another bill. Now, pay close attention because this is where 90% of people fail and reset their progress back to zero. It's called the ego tax. In the MBA world, we call this signaling. When you have zero, you have nothing to protect. But when you hit 20,000, you feel the urge to signal to the world that you are no longer at zero. You see a 20,000 balance and you think, I can afford the payment on that truck. Look at the opportunity cost. If you take 10,000 of that foundation and put it into a depreciating asset, you aren't just losing 10,000. You are losing the future value of that money. At a 10% return, 10,000 doubles every 7 years. In 30 years, that 10,000 would have been worth nearly $200,000. That status symbol didn't cost you 10 grand. It cost you a massive portion of your retirement. At 20,000, you have enough to be dangerous to your own future. You must value the freedom of the number more than the status of the object. In finance, we use a term called option value. It's the value of having a choice. When you have $20,000, your negotiation power in life changes. You have walking away power. Imagine two employees both making $60,000 a year. Employee A has $0. Employee B has $20,000. When a toxic manager asks them to work uncompensated overtime, employee A says yes because they have to pay rent. Employee B, however, knows they can survive for 6 months without that paycheck. They carry themselves with a different posture. When you aren't desperate, you negotiate from a position of strength. Ironically, this willingness to walk often leads to higher salaries and more respect. $20,000 is the price of your dignity. It is the minimum amount required to hold your head high in a room full of people who think they own your time. But there is a hidden clock ticking that most people ignore until it's too late. The most valuable asset you have isn't the 20,000. It's the time that money has to grow. Saving 20,000 at age 22 is mathematically superior to saving 100,000 at age 45. Why? Because the 20,000 has more compounding cycles. Every decade you wait to hit this threshold, you have to save 3 times as much money to reach the same result. This is why hitting 20,000 early is a cheat code for life. It buys you a longer runway. If you are older and just starting, do not be discouraged. Your mission is simply more urgent. You must reach this threshold faster to make up for the lost cycles. Once you hit 20,000, the engine is finally attached to the car. The person who can save $20,000 is the exact same person who can save $1,000,000. Why? Because you have rewired your dopamine receptors. You have proven you can delay gratification. Most people are dopamine addicts for small, cheap thrills. To save 20,000, you had to replace those cheap thrills with a deep satisfaction found in security. This is a biological change. You have successfully fought off the status tax. Once this habit is locked in, the rest is just arithmetic. At 20,000, your money starts contributing alongside you. Imagine you save $1,000 a month. To hit your first 20,000, it takes you exactly 20 months. But to get from 20,000 to 40,000, it takes less than 20 months. Your original 20,000 just earned you $2,000 in interest. Suddenly, your money is doing 10% of the work for you. By the time you hit 100,000, your money is doing 50% of the work. This is the acceleration curve. But without that first 20,000, the curve never begins. You stay on the flat part of the graph forever. If you are at zero today, don't look at the billionaires. Look at the $20,000 line. That is your target. That is your exit ramp from the rat race. The world is designed to keep you reactive. It wants your brain taxed by stress so you don't notice the opportunities passing you by. It wants you to stay underwater. But once you cross this threshold, your trajectory changes. You stop being a victim of the economy and start being an architect of your own life. It won't be easy. It will require you to be a silent investor while everyone else is loud and broke. But I promise you, the view from the boat is much better than the view from underwater. If this perspective shift helped you today, subscribe to the channel and join our community of silent investors. We focus on the math and the systems that actually move the needle, not the hype. I want to hear from you. Leave a comment below if you are currently on the way to your first 20,000, or if you've already crossed that line and felt the shift in your own life. Your story might be the spark someone else needs to stop reacting and start designing. Build your foundation. I'll see you at the threshold.